Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to talk about European ETFs that invest their money in emergent markets. And this is part 1, so I'm going to talk about the MSCI Index ETFs and the FTSE ETF that I found. So what are emergent markets? Well, the definition is kind of silly because an emergent market is an economical market that has some characteristics of a developed market, but it is not quite there yet. So actually it's a stupid definition, but we are going to hang with it for this time being. And the 10 largest ones are the next ones. So you have Brazil, China, India, Indonesia, Mexico, Poland, Russia, Saudi Arabia, South Korea and Turkey. So those are the 10 largest ones. And of course, you know the other short names that they give it. So the BRIC countries, or actually the BRICS is one of the most common ones, but the S, you see, it's not here because the S stands for South Africa. The E in BRICS stands for Eastern Europe. And then the BRIC countries, of course, it's Brazil, Russia, India, and China. And then you have MINT, so that's Mexico, Indonesia, Nigeria, and Turkey. Then you have the next 11, so I'm not going to name those. And you also have CIVETS as a short for some emergent markets put together in a short name that you can pronounce easily. So, in fact, there are 50 countries that can be called emergent markets, even more than 50 countries that can be called emerging markets. So we have a lot of countries to choose from, but in these videos, I'm just going to talk about ETFs that invest in a global array of emerging markets, so not only into the BRICS or just in a few countries, so not specifically in China or India, but always complete globally emergent markets funds. So I found in total 23 ETFs that are based in Europe and invest in emergent markets and that distribute a dividend, because of course my channel goes about stocks that give a dividend and foremost also ETFs that distribute a dividend, and they are not synthetically replicated. That's really important. I really don't like synthetic replicated ETFs. So they buy stocks that they don't actually, so they invest in stocks that actually don't belong to the indices where they say they put their money towards. So I think those kind of ETFs are more for the distributors of the fund than for the people that buy them. So I'm not a fan of them. And if you know of any other European-based ETFs that invest in emergent markets, please let me know in the comments down below, and then I can take them up. In the series that I did for the European ETFs, I got one message that said, hey, you missed that one. So the next videos that I'm going to make about European ETFs, I'm certainly going to take that one with me. So thank you very much. And once again, the MSCI index is the most used index, and the MSCI, just as a reminder, stands for Morgan Stanley. They fused with Capital International some years ago, and they put out a lot of indexes, and the MSCI Emergent Market Index is one of the most used for making ETFs. So you have many other ETFs, and we are going to talk about those in the next few videos. So this series is going to contain 4 videos, and at the end I'm always going to talk about their performance, their dividend yield, and their total expense ratio. And in this video, so I will discuss all the ETFs that are related to the MSCI Emergent Market Index. Also, I'm going to include one ETF that deals with the core MSCI Emergent Market Index. And then, of course, we have also the FTSE Emergent Market Index. So that's the Financial Times and London Stock Exchange Emergent Market Index. And all the data that I'm going to give are as of at the end of the trading day of the Friday, the 16th of February of 2024. So just so you know that for in the next 4 videos, in the next 3 videos and this one, I'm always going to talk about data that belongs to the end of the trading day of the 16th of February. And another few things that you need to know is, so all the ETFs that I'm going to mention, they all distribute their dividends in US dollar. Some also do it in euro, but that's only the case in Germany. So you can buy a few of them in Germany, and when they note in euro, sometimes they also distribute in euro. But all the ones that I'm naming here, they also distribute in US dollar, and I always picked the US dollar amounts when they distributed the dividends. For the ETFs that note on the SIX stock exchange, I took Swiss francs as the currency if they only were available in Swiss francs. But if they were available in Swiss francs and US dollar, I took the US dollar one. And if they only were noted in US dollar as a currency, then I took US dollar, of course, as well. And for the ones that were not available on the SIX stock exchange, I always took the ones that are noted on the London Stock Exchange. And of those, sometimes you have the British pound as a currency as well, or you also had euro there, but I always picked the US dollar one because that makes that they are easier to compare towards each other, and all the performances that I give are the performances as I found them on Just ETF for the US dollar amounts. So let's go through them. So the first one, it's one from iShares, the MSCI Emergent Markets UCITS ETF. So UCITS ETF, as you know, that's always when it's related to the European law. So when it's following the European law concerning ETFs. So most of the time you will see that in my videos, of course, because I talk about European ETFs. And the ticker symbol is IEEM. The easing code you can find here. The total expense ratio is 0.18%. So in this video, you will always find more or less the same TERS. So 0.18, 0.15, 0.20. They are not going to be high. In the next videos, they are going to be much higher. The currency on the SIX is US dollar. And dividend, I'm not going to mention it because it's always US dollar from now on. And then it contains 1,277 holdings or companies. And in total, there is almost 4 billion invested in this ETF. It's a sampling ETF, and it performed reasonably okay. But as you will see in the next for the next ETFs as well, the emergent markets didn't do that well the past 5 years. So if you look at it, over 1 year, up 3.2%, 3.3%. Over 3 years, because yeah, then you had the COVID situation going on, it's minus 24%. 5 years, it's 10.38% up. So that's not huge considering, yeah, when you have the compound effect, 10.38%, it means that you have less than 2% each year that the market went up. But of course, you have here the huge COVID thing going on, so that took away a lot of the performance. It distributes 4 dividends per year in March, June, September, and December, and it has a dividend yield of 2.30%. And these are distributions that occurred in the last year. So quite nice ETF. I put it first because, in my opinion, it's the best one that you can buy for following the MSCI index. But whether or not we are going to invest in it, because you know that we are still debating where we are going to put our US dollars that we receive from our dividends from the ETFs that distribute US dollar in our portfolio. So we want to invest in emergent market ETF. So this one is an option because it notes in US dollar and it distributes in US dollars as well, of course. But having the currency on the SIX stock exchange in US dollar is really important because we need to have an ETF where we can put our US dollars to work that we receive as a dividend. So I put this one first, so it's certainly a contender, but we need to go through all the videos, of course, to know for sure which we are going to pick. So let's go on to the next one. The next one is from HSBC. It's the HMEF one that tracks the MSCI Emergent Markets Index. So it has a total expense ratio of 0.15%, so it's the cheapest one. It's noted on US dollar as well on the SIX, and it's a cheaper one, so 10.16 US dollar for this one. It's invested in 1,448 companies. There is 1.8 billion invested in this one. It's also a sampling ETF, and in the past 5 years, yeah, more or less the same performance. So because it's tracking the MSCI Emergent Markets Index, you can't be far off. So I'm not going to repeat it for all the ETFs. You can always pause the videos as we go on. This one distributes also 4 dividends per year, and it's other months where it distributes them. So that's something that can be important to you. So it's January, April, then we have July, and then we have October. So the dividend yield also more or less the same because yeah, it's the same index. So 2.45%, and these are the distributions that you get here. The numbers are lower, but it's a cheaper ETF as well, so the dividend yield stays the same. But as you know, the only thing that I find attractive when you have a cheaper ETF is that when you want to reinvest your dividends, you have less, how do you say it? You have less overshoot. So when you have 109 francs to invest and you have one of 10 US dollar, or you have one of 40 US dollar, then with this one you have an overshoot of 9 US dollar that you can't invest with 109, and with the one from 40 you can only invest 80, so you have an overshoot of 29. So then yeah, 29 US dollar isn't working for you. So that's, I know percentage wise it's the same where the dividend yield that you get, but it's the way you can invest your money back into the markets that matters when you have a, a, a bit cheaper ETF to buy into. Then we have an ETF of UBS with a total expense ratio of 0.18, the EMM USA. I find it really disturbing that they have USA in their name as well as EM, but that's the way UBS does it most often. They most of the time have tickers that are a bit bigger than the other ticker symbols that you see on the stock markets. It's also in US dollar or in Swiss francs, so you can have both. It has 1,165 companies in it, 1.5 billion invested in it, and it's a sampling ETF. Once again, more or less the same performances as the other ones because it's the same index. And it's a UBS one, so here you can expect to receive two distributions each year. And for this time, it's not in January and August, but it's in February and September with a dividend yield of 2.35%. And yeah, you can see it here. I've also put the dividend yield, the dividend from the 1st of February of 2023, where it was 1.2937 US dollar, and the ones that you would have received if you had this ETF on the 1st of February of 2024, it was $1 and 0.54 cents. So the dividend dropped a bit, the distribution dropped a bit. I don't know what it's going to do in August, of course, so it can be that the one in August is a bit higher and that it can maintain its dividend amount in total for the whole year, but I don't know for sure yet how it's going to be, so we have to wait and see for that. Then we have XEMD, and when you say a letter combination, a ticker symbol in violet or purple, you know that it's only available on foreign exchanges, so not on the SIX stock exchange. And in this case, it's on the London Stock Exchange. As I said earlier, it's always going to be the London Stock Exchange. And it has a total expense ratio of 0.80%. It invests its money in 1,458 companies, and there is only 185 million invested in this ETF. It's a fully replicated one, so it's the first fully replicated one that tracks the MSCI Emergent Markets ETF. But it's a quite recent one, so it started in November of 2021. So we only have a figure for the first year, and it's 3.24%. So again, more or less in line with what you expect from the MSCI index. It distributes 4 dividends per year, and once again, it can be important to you. It's in the other 4 months that we are still lacking when we are tracking the MSCI Emergent Markets ETF index. So here it's February, May, August, and November, where it distributes its dividends. And the dividend yield, it's a bit lower than the other one, so 1.99%, so just under 2%. And actually 2 days before it was 2.01, but yeah, at the end of the 16th of the trading day of the 16th, it dropped just below 1.99% because the ETF price went up a bit. And these are the dates when it distributed and the distribution that it made in the past year. Then we can go to the next one that is noted on the London Stock Exchange, and that's one from Amundi. And it's a Luxembourg-based one, just like the one from UBS. and it has a total expense ratio of 0.20%. It notes on US dollar, and it's 36.33 US dollar right now. It invests its money in 1,405 companies. There is 156 million invested in it, and it's a fully replicated one. And here the performance is a bit lower for the past year, so that's a thing that you can look into. The total since its inception, which is also recent, just like the previous one, but it started a few months earlier, and that makes a big difference when you look at the performance, of course. So yeah, it took a way longer dip from the COVID dip that happened. It only distributes one dividend in a year, and you know from the ones from the ETFs that I discussed that invest in Europe, you know that they made a change, Amundi. So normally they distribute it in November, but now they changed to December. So it was also the case for these ETFs from Amundi that it changed from November to December, and you had a whole month that you thought that they didn't have a distribution that year. But yeah, on the 12th of December, they paid out $0.88, and it brought their dividend yield up to 2.42%. And then we have another one from the London Stock Exchange, but this one is the core MSCI Emergent Markets. And the most important thing there for the EIMU is that it invests in 3,120 companies. So more than double of the other MSCI emergent market ETFs, because it's the core. So you have a lot more companies that are in this ETF. There is 1.3 billion invested almost in this ETF, and it's a sampling one. With that amount of companies in it, it's not surprising, in fact. And the performance, it's a bit higher than the MSCI emergent markets itself. So you go from 3% more or less up to 5.5% almost. Also, the 3-year performance, it dropped considerably less. So the other ones were minus 24%, and this one is minus 20. And the 5-year performance is also 6% higher on average than the MSCI index, emergent market index. It distributes 2 dividends each year, and it's in March and in September. There's a dividend yield of 2.49%, so not much difference here compared to the other ones. And these are the distributions that it made in the past year. And then we have the last one, so it's the FTSE Emergent Markets ETF from Vanguard. And FTSE, I said it in the beginning of the video as well, so it stands for the Financial Times and the London Stock Exchange that make these indexes. So every time when you see FTSE in an ETF, it refers to the company, the collaboration of the two companies, Financial Times and the London Stock Exchange, that made the index. The total expense ratio is the most expensive one with 0.22%, and it's noted in Swiss francs, and it invests in 2,108 companies, almost 2 billion invested in this one, and it's a sampling ETF as well. So these performances, it's a bit higher, but not that much for the past year. For 3 years, it's 4% better, and for the 5-year performance, it's also around 4% better than the MSCI Emergent Markets Index ETFs. It distributes 4 dividends per year, and as most of the Vanguard ETFs that distribute dividend, it's always in March, June, September and December. And the dividend yield, it's a tad bit higher than the other ETFs, but not that much higher, so only 0.2% higher. And these are the distribution that it made in the past year. And here is the overview of of all the ETFs that I discussed today. So you have the IEEM on top, but the 3-year performance, if you compare them to the ones from the core MSCI index, is worse, of course. So I actually divided them as such. So the best one from the MSCI Emergent Markets index is here. And then you have the best one from the core MSCI, because you only have one ETF, of course, but they performed, actually the core performed better than the MSCI index itself. And then you have, of course, the FTSE index that tracks the emergent markets. And yeah, they are a bit better than the MSCI, especially on the 3-year performance and on the 5-year performance. This past year, more or less the same. So it's up to you which one you want to choose. But for me, of course, this one, it invests in US dollar, and the HMEF one as well. So there isn't much difference between those, except this one is a bit cheaper to buy. But yeah, we are still not convinced of which one we are going to buy, but we still have a lot of time to decide upon that, because yeah, we only have about $50 on our Swiss quote account, so a long way to go until we reach 750 US dollar with the dividends that we receive. So I can wait and see what they are going to do the next year, I think, before we invest the first time US dollars in an ETF, to really decide on which one we are going to choose. But yeah, I think it's really important to look at all the ETFs, which one you have available. So thank you for watching this video. Please consider subscribing if you like this kind of content. Hit that like button as well, and see you on the next video of my YouTube channel. Bye!